Hey guys, welcome back to the series of videos where we're talking about technical trading, so chart patterns, all that kind of good stuff. Today, this video, talking about channels. A little bit different from trend lines, very similar but slightly different and quite nice when you get to see them. As always with these videos, this is my take on it. The textbook's slightly different, but at the end of the day, it's how you perceive it and how you kind of work it into your own trading. Any comments you've got on it, would love to hear your thoughts on channels, whether you use them, whether you don't use them, how you maybe if you've got, what I really would like, if anyone's got a real sneaky, clever little way of their little twist, their little flavor on channels that works for them, leave it in the comments below. I love to hear that kind of stuff, new ways of looking at things. So a channel is, we have this kind of thing, and if you've seen my videos, guys, you know by now I am not an artist. However, I will try my best to put it on the whiteboard. But the good thing about me not being an artist is that it's the real world, because charts, they're never the same, they're never perfect. In the real world, when you look at the heat of the moment, you're never going to get a beautiful symmetrical thing that you see in the textbooks. But the point is with the channel is you have your uptrend line here, and again, this is kind of sloped a little bit more. You know what, I will redo it because I don't want to confuse this with a range bound market. A channel is definitely something that is more of a trend. So let's try and get a better thing here. That's better. Okay, and we've got obviously an uptrend channel or a downtrend channel. The point is now is we draw a trend line here, and that's the standard trend line. But with the channel, what we can do is we can, and obviously a lot of chart packages allow you to do this just with the pure parallel tool, is that we now have an upside to the trend line, and then we have that channel. And I like to go one step further, and I'll use a green pen here. I've got thousands of pens in my hand. I like to put like a midpoint mean here, and I'll show you why in a second. So the theory is that market is staying within those boundaries. I love anything that frames a trade. For me, I love it because it just gives you a real structure to work from. So the point is that you're looking to buy as you push the lows here. This is what the textbooks say, by the way. You're looking to buy as it hits the lows. Now, obviously, easier said than done. That's what the textbooks say, but you and I both know we're trading in the real world. It doesn't really work like that. So how does it work? So the idea is you're buying at lows and you're selling at highs. You're buying at lows, selling at highs, buying at lows, selling at highs. Yes, great, all very nicely from a textbook perspective. But in the real world, what do we do? Well, the idea is that you are looking, and what you can do is one step further than this. You can kind of split it up into thirds if you like. The idea being is that you've got an area where you're looking for buys. So let's say this is a daily chart here. Okay, this is your daily chart and it's a channel. You would then, in this section here, let's say the day is opening in this section here, and we zoom out to here, you would then go down into a lower time frame, an hourly, a 15 or something, 2 hourly, whatever it may, it doesn't have to be like that, and look for a bottoming pattern. Because the idea is you're framing your trade beforehand. You're saying, listen, we're in an up channel, we're at the lower end of the channel, we're by the support level, we're in the lower third or the lower quadrant, whatever you kind of like to do to frame it. So I'm looking for a long. So I may well look on my intraday chart to see kind of a double bottom pattern. I may look for, a head and shoulders pattern, something along those lines that means that I'm going to go longer. So that's the point of the channel, is that for me anyway, I use it to frame my thesis and what I'm trying to do in my trading, and then I'll go deeper down into the shorter time frame to execute the actual trade. And then the theory is that you're looking for the market to push up to highs. Now, very often, I always think it's prudent to, if you're having a central point, a mean, to scale off some of your position there, because often you will get it where it tags the mean, then comes back up and retests and sort of spends some time before going back up. My kind of theory is it's an outside in trade. So whether you're shorting at the upper end of the channel or buying at the lower end of the channel, but just a quickly caveat there, guys, if you're shorting it, be very careful because the overall trend is up. So you are going against the grain. Not to say you can't, if you get a little bit of an explosion and find a little sweet spot to come back into the channel, by all means, that makes sense for me from a risk reward perspective. But bearing in mind that you are kind of in that uptrend and you are going against the whole big flow, the big tide that's being pushed. So that's the theory of it. You're buying in that section. I like to kind of use that on my daily and then go back into a 15, whatever it may be. Comes back up, then you're looking to scale some out or whatever it may be, or maybe you're looking to hold it for an explosion out the channel. One of the textbook ways of doing it is that you have that channel and then you buy here as it breaks out of the channel. So the thing is, you wait all throughout the channel and then you buy for the breakout. Now, I am a little bit cautious of that because I think you have to be careful that you're not right at the end of a trend, because if you're buying it right there on the breakout, it's literally right at the end. It's already done all its kind of stuff. To me, yes, I'm sure there are plenty of patterns where that works, but for me, I feel that's a little bit late in the game to be buying. I'd rather be using this to frame it, buying in this lower quadrant or lower third of the channel, scaling off into the mean and such, and just literally looking for buys until it resolves itself and goes into something else. So that's my take on channels, guys. What are your thoughts on channels? Do you use them? Do you think this is the right way of approaching them? Have you got a different way of approaching them? Do you think the textbook is showing it a different way? Love to know what your thoughts are on this and how you use it or don't use it in your own trading. If you like this video, please give it a thumbs up. And if you want to see more videos from me in the future, then subscribe if you haven't subscribed already. We're going to be talking technicals, we're going to be talking discipline, psychology, strategy, and loads of other good stuff. Just tips and tools and tricks that will hopefully make you more money in your trading. Take care, guys.